Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. We will be telling you all the trading setup as well as what is going to be moving the markets in trading session today, along with top market experts who will be guiding you through the trading session and the outlook going forward as well. Remember, it was the 9th straight day of a red tick for the Nifty as of yesterday. The index heavyweights Reliance Industries and HDFC Bank pulled Nifty further lower in trade, with Reliance Industries ending at a 52-week low, having now corrected 30% from its peak as well. The question now is for the Nifty that will 22,000 on the downside survive on the Nifty after the sharp US market sell-off overnight. This all happened after President Donald Trump did say that a 25% levy of tariffs on Canada and Mexico will take effect as on March 4th, as both the countries could not negotiate a reprieve, dashing the hopes of a last-minute deal which had taken place last month. Canada, in response as well, has announced retaliatory tariffs on the United States of America. With this kind of an announcement coming through, we've seen that overnight S&P 500 index ended 1.8% lower, turning negative for the year and marking its worst day since December last year. The Dow Jones also fell by 650 points, but did see about an 800 point from the highs of the day on an intraday basis as well. The Nasdaq Composite fell about 2.7%, led by a sharp over 8% sell-off in the shares of Nvidia as well. All of this happening with the Trump tariff talks taking in place starting today, later for Mexico and Canada tonight. And when we talk about China, it will also start taking effect starting April of 2nd as well. So let's listen in to what Mr. Donald Trump really had to say that triggered this sharp sell-off overnight in the United States.
Very importantly, tomorrow tariffs 25% on Canada and 25% on Mexico, and that'll start. So they're going to have a tariff. So what they have to do is build their car plants, frankly, and other things in the United States, in which case they have no tariffs. Very importantly, tomorrow tariffs 25% on Canada and 25%.
Absolutely. So those were the final words that actually led to the sharp downfall in the markets overnight US. Now, Asian markets also opened weak this morning with Wall Street sharp losses overnight as well. We did see Japan's Nikkei fall about 1%, South Korea's Kospi slip about 0.4%, Australia's ASX 200 dropping by over 1% as well. But we are seeing now just slight recovery on the Kospi. The GIFT Nifty is indicating a flat to a negative start at 22,105. At this point in time. In the initial trading action, it was also indicating a start below 22,000. So we'll just have to wait and watch as to how things really shape up. The foreign institutional investors continued to be net sellers in the Indian equity markets even yesterday, with 4,788 odd crore rupees being sold off on Monday, whereas the DII is buying stocks worth about 8,790 odd crore rupees right there. Let's welcome our top guest on the show to help us understand what do all of these really mean for the market mood and the trajectory going forward. We have with us Mr. Dharmesh Kant, Head of Equity Research at Chola Securities, joining in. Warm welcome to you, Dharmesh. Good morning to you. Tell us, with finally, negotiations falling on the back burner, 25% tariffs coming in as a reality later tonight for Mexico and Canada, and then later in April for even China. What does all of this really mean? Because this would probably, and of course, Canada retaliating with tariffs as well. A trade war has just begun starting today.
Yeah, good morning, Sakshi. I mean, the good part about this is the higher limit has already been set. So earlier when the tariff announcement started happening, it was say 60% or 40%. So now we know the maximum tariff say on Mexico and Canada can be 25%, and on China it is 20%. From here on, based on the negotiations and how these countries' bilateral agreements happen, this can be lowered down rather than going up. So the maximum damage which can happen because of tariff is known to the market. That's the better part. And if it prevails, I mean, if it continues for 6 months, 1 year without any negotiation, and there is a counter tariff happening on by these countries on US goods as well, then what will happen is they will be resetting in the trade balances, and that will have its toll. Definitely, earnings will take a hit for say a year or so, and at the same time it will be inflationary in nature. But eventually, US is going to benefit from it because domestic consumption and manufacturing will go up, which will in turn will add to its own profitability. So for US, it's not a problem. For other parts of the world, it's definitely a problem. And where does it leave India then? So
Yeah.
India, as of now, as the talks are happening, India has reciprocated by lowering tariffs on few of the goods. I mean the import duties, the custom duty part. I think having seen this, we would be more adaptable to the adjustment of the tariffs rather than going by the collateral damage. So that India is smart enough, it won't happen. So eventually it will balance out. But what we have to deal with is the inflationary trajectory, the globally which will happen, the upsetting inflationary environment for at least a year. And that also puts into balance the interest rate scenario, how that is going to pan out. So I still hope that in April we will get a one more interest rate cut and then maybe it will be a pause. So definitely uncertain. But coming to the macros, having said all this, with this the kind of correction which has happened into the Indian market, where does it leave us? Historically, if you look at 10-year or 20-year kind of a trajectory, so normally what we have seen, India has traded at a PE multiple of 20-21 times on a trailing basis. At the same time, its earnings has grown by 10.5 to 11%, and same has been the growth on the index level of 10, 11 to 12% kind of a CAGR we have seen for last. Either you take a 10-year window or a 20-year window. Precisely, we are there now at 22,000 odd levels. We are at those mean levels of the averages for last 10 year or 20 year. And GDP, nominal GDP has grown by 8.8% for last 20 years, and this the next year expectation is 10.1%. So that leaves us with a earnings trajectory of say at least 10 to 11% growth for next 2 years. So having the same multiples in place, I think we are almost near the bottom. This is the last leg of panic which we are seeing in the market, and market does
Right.
things in excess. So we may have 3 to 4% more fall, but that should be the end of it. So time to get into your value buys now.
Yes, exactly. You took the last part of your answer was something that I was meaning to ask you, that how much more downside should we be prepared for? Because we've been hearing that this could be the last leg of pain, but how much more pain and how long will this pain really sustain? So you're saying 3 to 4% more on the Nifty downside from here on. And, when will the recovery start and what will be the key trigger for the recovery then, Dharmesh?
Definitely, Sakshi. I mean, 3 to 4% is my best estimate, and market may oblige before that, or it can do excesses. It's known for that. The other pain point has been the FI selling, so that's likely to continue. To my mind, I mean, we are the pain point may be there for 1 or 2 months more. So by mid May, when the monsoons forecasts are clear, we should be in for the bottoming out process and then for the next leg of the rally. And by that time, this entire tariff thing, the tariffs has been imposed, right? So the new world order, what is to be there, would be negotiated in next 2 months time frame. We would exactly know how the numbers are going to pan out, how the inflationary trajectory is going to pan out, and what are the bilateral trade agreements which India will be having other than US. So how entire this shape up will happen will be clear by that time. At least window screen will be there for us to have an assessment of that. And earnings, corporate profitability will also be noted. As of now, the sense is that this year is already lost. We may end up with 6 or 7% kind of earnings growth. But thereafter, from FY 26 and 27, it should be 10.5 to 11% kind of earnings growth, which is a scenario being built in there. So once the market starts baking that, then this market will look actually very cheap. So my own sense is if 12% kind of earning growth we take for next 2 years, so on 20 times PE multiple, index should be around 26,600 or 500 odd levels. But that is 2 year forward earnings multiple I am talking about. So that's the juice we are having in the market. That should trigger in fast.
Okay, the pre-open rates have started to take in. You're already seeing that we are probably hovering around 22,000. At one moment, we did slip quite a bit as well. So 21,994 is what you're seeing, a half odd percent of a downtick, similar to what the Gift Nifty was initially, looking at. But let's look at the key factors that we need to look at in terms of key stocks. Reliance Industries. Remember, after the fall yesterday, about 2 odd percent or so, we are again seeing that in the pre-open there is further a percent lower tick. 1158, 1155 kind of levels being seen on RIL right now. Already the stock is at a 52-week low. From its peak, it slipped about, 30 odd percent. Let's ask Dharmeshji as to what's next for this one. Dharmeshji, for Reliance Industries, we all know that this is a longest term story that everybody bets big on. It is a core portfolio stock for so many investors. It has been advised so for many, many years as well. When one looks at Reliance Industries, this is the second year in a row when we have actually started to see first 3 months again in downtick. 11 odd percent has been taken off from Reliance Industries after a negative return that was posted in 2024. Are you looking at these zones as comfortable zones, attractive zones for those who are looking at Reliance Industries for the absolute long term? Or would you still believe that there is some more downside and one should probably see maybe 1,000 or even below levels coming in for this one?
Actually, I mean, some more downside in such kind of a market is not ruled out. It can happen. We have seen that multiple times, be it 2008 or 2011, then 15, 16 period. So market does things in excesses when everything is being sold off by funds. So then they don't look at the merit of individual companies. If I have to exit the market, I have to liquidate my fund, then I will liquidate it. And my all the holdings which are there gets liquidated. And that has been the case with Reliance Industries as well. And I mean, there are two parts to Reliance Industries. One is that a year back, the articulation was that the value unlocking will happen soon for all its businesses, and that was triggering the rally in Reliance Industries. Now that has been pushed back to 2 or 3 years down the line. So they would be developing the geo business and the new energy business first, and the retail business will is already in the growth phase, and they would like to stabilize it before value unlocking. So these three critical SOTP based kind of a component for Reliance Industries will take its own time. I mean, and then I think our senses SOTP based valuation is still 2100 in next 2 years time frame. So from here it's almost a 80-70% kind of an up move if you are holding this company for at least 2 years. So we have been recommending buy on this company, and any declines can also be used to deploy your incremental money. I mean, this is one of the best and safer bets for a long-term investment perspective.
Fair point. The markets are settling in the pre-open trade 21,974, 144 points lower is what is getting indicated as far as how the Nifty could begin the day. So we are now preparing for sub 22,000 levels, as at least that has been the indication from the GIFT Nifty and the pre-open trades as well today. Let's welcome Osho Krishan, Senior Research Analyst of Technicals and Derivatives at Angel One, now to be with us. Warm welcome and good morning to you, Osho. Well, sub 22,000 levels seems to be a reality now. What do you foresee for the markets, Nifty and the Nifty Bank? What would your trading strategy be today?
At these
Osho,
levels,
yeah.
I'm expecting that there can be some kind of consolidation or recovery that can be seen, because the strong or historical support is placed around the zone of 21,800 and 22,000 zone. So overall, I am expecting that we have seen a strong consolidation around the zone of 21,800 and 22,000 in the last calendar year. So I'm expecting that these levels can provide a very strong cushion to the fall that we are witnessing in the market. And from here onwards, one can definitely look for buying opportunity in these market conditions where the parameters are extremely oversold, but now the conviction on the buying front has been on the higher end. So I'm expecting that from in the coming period there is a possibility of reversal in our market. No doubt today also and yesterday also there has been a hint of breakdown of 22,000 zone, and today we are starting the day below the zone of 22,000, but I'm expecting that in the worst case scenario 21,800 can be tested in benchmark index, and from there onwards we can see a decent movement. But on the higher end, I'm not expecting it to be very aggressively bullish or very aggressively target for the Nifty, because looking at the developments that I can say, so in the past 5 months there has been negative closure for Nifty, and historically this scenario has been seen in the year 1996. So that means after 2 decades the same scenario has been repeated, that 5 months consecutively Nifty has given a negative return. So there is a possibility of breather in the month of March. So I'm expecting that the same outlook can be foreseen for the coming period, and one can definitely try to start accumulating good counters here onwards in a larger force. For example, if someone has to deploy capital, so I will be aggressive in deploying capital at current levels. Approximately, I will be advised to deploy 60-70% of the capital at current levels in the
Okay.
market from short to medium term perspective.
Okay. So, Osho, any two stock ideas for today?
Yes, there are two counters which are looking very positive. First one is Voltas from the consumer durable space. Voltas has seen a very strong momentum in the last trading session, and today also it is about to open on a positive terrain. So I'm expecting that there can be a continuation of the higher end in this counter. So one can definitely accumulate Voltas around the zone of 1360, 1370 should be an apt zone to start accumulating this counter. 1310 is a very strong support, so one should keep a stop loss of 1310, and I'm expecting a target of nearly 1420 followed by 1460 in a positional basis. The other counter which is looking very positive to me is Indian hotels. Indian hotels have seen a very strong reversal from the 200-day simple moving average, and I'm expecting that there is a possibility of a strong reversal in the coming period also. So currently, Indian hotels is opening up with a gap down of nearly 1.8%. So this can provide an opportunity to accumulate this counter. I'm expecting 690 is a very strong support for this counter. So one should keep a stop loss of 690, and on the higher end, one can definitely expect a target of nearly 750 to 760 on a positional basis.
Okay, fair point. So those are the two stock ideas that Osho has shared with us. We'll also look at a slew of stocks that you can look at when the market starts to open. These will be important to watch. They are in news. You have RBL Bank. Remember here, GST authorities have initiated searches at some of the offices. So another negative news flow coming in for RBL Bank. There's Time Techno Plus. The company is introducing PE pipes for gas distribution. A positive sentiment there. JK Sentiment. The company has approved acquisition of 60% stake in Safco Cement. That's something that you could also look at. Uno Minda will be important to look at. The company has received a GST demand and penalty order of over 12 crores. There could be a minor blip there. 2% downtick initiated as far indicated as far as the pre-open trades are concerned. IRCTC, it's been granted the Navratna status to IRCTC Limited. There is a positive development on that one. You have Godrej Properties. The company's cancelled 2008 agreement with TCM for development of land parcel in Kochi. There could be some sentimental downtick on this one too. IEX, the power trade volumes have risen by 9% in February. So that stock could be hoping to see some positive moves today. Prestige Estates, the income tax department has concluded the search at the registered offices and other branch offices of the company today. We really need to find out what the observations have been. Nava is going to be in focus. The company, its Zambian subsidiary has expanded the exploration license in the area. Sudarshan Chemicals is another one that you could look at. The company has completed an acquisition of Huback Group as well. So another sentimental positive on this one. Brokerage houses, we have a lot of reports coming in. First one is on Varun Beverages, where CLSA has upgraded the stock to high conviction and an outperform rating, with a target, however, that's been cut to 770 odd levels. TAM, however, remains very high and large and is growing, they believe. And they believe there is a large upside for soft drink consumption. Although they have just cut the calendar year 2025 to calendar year 2027 earnings estimates by 4 to 5%, reflecting on the heightened competition as well. On Titan, there is a Macquarie report with an outperform rating. However, the target price has been cut to 4,000 levels. They believe there is higher lease cost due to Trump's tariff talk and potential hit in the near-term demand as well from gold price inflation. The next one is Lupin. Aquarius has upgraded the stock to a long and a target price of 2379. They are building in a 10% revenue and EBITDA CAGR over FY25 to FY27 estimated. That can be positively surprised as well. They are looking at strong visibility till FY27 estimated earnings, when peers' earnings are going to be deteriorating as well. Last one is Morgan Stanley on Canfi Homes, where there is an overweight rating and a target price of 885 on this one. Markets have started to take. On a lower note, we have slightly lower start below the 22,000 levels, 119 points lower in trade. All the sectors seem to be indicating a negative start, with only the India Wix up by 1.6% at 13.9. The top losing index is metals with over a percent cut. You also have the small caps that are dragging by 0.6% right in their opening tick. Realty, auto, as well as consumer durables remain to be other indices which they are seeing over a percent kind of a cut. But the Nifty Bank also down by about 0.2%, and all the financials indications are down in trade. On the Nifty, the gaining stocks remain three, and that too from the banking space: ICICI Bank, HDFC, and SBI. Rest all of the stocks on the Nifty have slipped into the red right at the opening tick. So you do see a very, very somber start for the markets today. ONGC is declining 3%. You can actually see the crude oil prices easing. That is impacting the upstream companies. HCL Tech, Wipro, Tech Mahindra. So the IT stocks again on the weaker zone. You also have Nestle Coal India as among those stocks which are on the lower end as well. On the F&O space, what's higher is something that Osho mentioned. Voltas is his top pick. It continues to move up higher, 1.5% up. You also have Angel One, Adani Total Gas, SBI, ICICI Bank as some of the other stocks that are opening higher. But on the weaker side on the F&O space, you have Aditya Birla Capital, Oro Pharma, ONGC, Petronet LNG, and even Bombay Stock Exchange. That's also down in the red as well. Let's actually get back to our guests to understand how do they find the opening. So finally, we are seeing sub 22,000 levels on the markets. Dharmesh ji, you did say that we are seeing about a 3 to 4% downtick. There could be 1 or 2 months of more pain. But if one really has to look forward, that finally the reversal will start to happen at some stage in this year, and there could be some relief coming in. Do you think these are good levels to start putting in fresh money as well, to average down positions or to allocate afresh to certain sectors and stocks? Where are you really looking out for value, sir?
Yes, actually, I mean, at the risk of saying this, because the market has been correcting from 26,000 and from 24,000 onwards, 23,500, we have been saying that this is a good time. From there also, the slide has been far sharper, and still it can go further ahead as far as slide is concerned. So the sectors, I mean, it's to the judgment of the investors, so where they want to deploy money. But the sectors which look good, attractive at current levels is one is very clear is the public sector banking space. So the numbers were good and they are well capitalized, and I do expect them to be a first beneficiary of any uptick in the economy which commences maybe from next quarter onwards. So that is one good sector to get invested into along with the private sector banking space, but the weightage will go to the public sector banking space. The other sector which has been hammered quite a bit is the defense space. So if you look at the defense number, the kind of earnings growth which HAL or BEL has reported, they are a very good set of numbers. And despite that, the hammering on the stock price has been quite good. And now even the valuation froth has been, totally taken out of the window. So now they are trading at less than the mean multiples with a sufficient elbow room for the growth opportunity. So that is one space where one should be looking at. And thirdly and selectively, maybe the railway space for the likes of, say, Ircon International, which has now been 130, 135 kind of a stock price level. It has come
Yes.
down to at 14, 15 times kind of a PE multiple. It used to be around 400. So those kind of frauds has gone away. And it will deliver a 20, 18 to 20 percent kind of a CAGR on its profitability and order book growth. So these are good value wise. I mean, these are three sectors, and the fourth one it's a volatile space. It will continue to remain volatile. But if somebody is a braveheart, is the metal space, where I think, despite this tariff wars and resetting of the trade balances and inflationary environment, metals will still find traction, because even if you're inward looking, you would be consuming metals for infrastructure and other development. And it's been a long while, say Europe or US, where there has been any significant infrastructure overhaul been taking place. So that's likely to shape up the metal space, where there I think the topics can be Hindalco and Jindal Steel and Power along with JSW. So these are the pockets where one should be constructive about. Try to avoid autos as a space as of now, and FMCG. So these two spaces, I don't think they will find much traction.
Okay, auto FMCG on the avoid list. Let's go across to Osho then. Osho, how do you sense the opening is? Is it as per your expectations? Do you see further drop down from here too? And what are the key stocks that are catching your attention right at open?
See, overall, talking about the derivative front, then we have seen a decent OI concentration from the put writers around the zone of 22,000 and followed by 21,900. So I'm expecting that initial 15 or half an hour trade can see some kind of volatility in the market, but after all, I'm expecting that market will move forward towards 22,000 and above levels, and that will be providing intraday traders a buying opportunity in market. On the higher end, call writers have been scattered from the zone of 22,200 to 22,400 kind of a strike. So I'm expecting that on the higher end, 22,250, 300 could be the zone that one can expect for the intraday trades, and accordingly one have to do their risk management or the strategy for the day. On the stock specific front, there are many counters which are looking very positive to me. Firstly, yesterday we have seen a very strong traction in the pharma and healthcare space. So two counters from pharma healthcare is looking very positive. First one is Lupin, that has seen a very strong reversal from the lows, and the other one is Fortis Healthcare. So both these counters are looking very positive to me. In another 15-20 minutes or half an hour of trade, we can see some kind of buying traction coming back in these two counters as well. So one should definitely keep these two counters in their watch list for day trading or even for positional trading.
Okay, got that. Dharmesh ji, we are seeing some sense return to the banks and the financial space, large private sector banks like ICICI, HDFC, and some of the PSU banks as well. Financial services also showing us some ticks on the higher side. Is there any comfort zone here within the banks and financials for you?
Yeah, definitely. I mean, stock specific, Bank of India or SBI looks comfortable at current valuations from the public sector banking space. And both reported, good set of numbers, be it the credit growth or the asset quality, everything where there was an improvement with the stable names. And in the private sector banking space, ICICI Bank has been an outperformer in this entire fall. So that continues to hold good, and they have been doing quite a good business as well. So credit growth is likely to come back to near, 17-18% kind of with Q1. That is what our expectation is, primarily driven by the overall personal bank, that is the personal loans and the home loans. So those are two areas which is likely to do good for ICICI Bank, followed by Axis Bank. So these two remains to be a topic from the private sector banking space. So maybe a basket of four: Axis, ICICI, SBI, and Bank of India can do well for investors in the current market scenario.
Fair point. Anything within the banking space that could be looked at for trading as well, Osho?
Yes, from banking space, Axis Bank is looking positive to me because it has been into a very strong consolidation zone around the same levels, 1,000, 1,010 odd levels from 20 consecutive sessions. So I'm expecting that it is hovering at a very short-term moving average around the 20-day exponential moving average. So I am expecting that in the coming period, there is a possibility of a strong traction coming back in Axis Bank. On the lower end, 990 is a very strong support for this counter, and one can definitely, if buying the counters, and 990 should be kept as a stop loss in this counter. On the higher end, the first or immediate resistance is seen around the zone of 1035. The time it surpasses the zone of 1035, there will be high conviction coming back in this counter, and then one can definitely expect a target of nearly 1080 to 1090 from short term perspective. So overall, the structure for Axis Bank is looking very positive, and I'm expecting that in the very short time span, there can be a possibility of breakout, of consolidation breakout that can be seen in this counter.
Okay, fair point. Dharmesh ji, you did say that FMCG is something that you believe there could be further pain in this space and one needs to be cautious. But I wanted to ask you about Varun Beverages. Of course, in the Pepsi bottler monopoly story, it's been an erstwhile wealth creating story as well. There is also a brokerage house report that has given an outperform rating and a high conviction as far as Varun Beverages is concerned. CLSA believes there could be an upside target of 70% from the last close, and although that target of 770 is lower than their own initial target of 802, but they believe the risk reward is pretty compelling after the recent consolidation. How are you really looking at the space? They also hint some sign of competition that could be bothering. But Varun Beverages, what's the study that you have on the stock?
So historically, it's been an outlier in the entire space because it's not a pure FMCG play. It's more of a bottling
Yeah.
plant play. And that way, if you look at the management for the last 7-8 years, they have done a remarkable job. The capital allocation has been excellent and they have been generating 30% plus kind of an ROE on the incremental cash flows as well. So that's the best part of the blown beverages. Only thing is it has been expensive. So has been the case with any company which delivers such kind of a numbers year over year with a proper capital allocation. It's likely to be so. I think still there's a juice left there. It's not that the stock is going to consolidate just because the market environment is such. You have seen some selling pressure, and most of the funds when they are liquidating the FIs, so it's a holding in every fund. So there's not even a single fund which is not having a Varun beverages in the holding. So
Yeah.
liquidation impact is happening. It's the right time to buy. Even I do feel that for next 2 years at least, you can have a decent upside of Varun beverage, maybe 660, 700 kind of a level. So which leaves you 25-30% kind of an upside from current levels.
Okay, fair point. So that's as far as Varun Beverages goes. Right now, you're seeing only the PSU banks, financial services, and the Nifty bank showing you some slight gains, but rest of the pockets have all slipped. Osho, anything on the IT pack? This pace continues to drag even weaker. Today, it's the top losing sectoral index, 2% lower even today. How are you assessing the pain that has been only getting worse by the day and by the week for IT space?
See, overall in the IT index, there has been a kind of a breakdown from the 200-day simple moving average. So I'm expecting that there could be a possibility of further continuation because there has been a very steep correction in majority of the heavyweight companies like TCS, HCL Tech. All these stocks have seen a very steep correction without any sign of pullback or respite. So I'm expecting till the time we are witnessing such kind of movement, one should stay sidelines from the IT space. The time we witness a kind of a consolidation or bottom forming in these counters, then will be the time that one can look for these counters to accumulate. But for now, there has been very strong correction. For example, for TCS, there has been a steep correction from the zone of 4,000 towards 3,460 odd levels at present. So there has been a very strong correction, and the technical parameters have already been into the oversold terrain. But overall, looking at the momentum in the selling pressure in these counters, one should stay sidelined. The time there is a kind of a consolidation or a breather that can be seen in this counter, then one can look for accumulating IT space. Till that time, it's better to avoid.
Okay, fair point. Let's also look at some of the other pockets. Dharmeshji, I wanted to get a sense on some of the stocks again with you. One is Ultratech Cement. Again, it's in the gainers list today after the recent announcement of its foray into the cables and the wires segment. How are you looking at the stock, as well as how would you look at the existing players like Havells and Polycab in the cables and the wires segment? How are the dynamics going to change going forward for someone who was betting big on, say, a Havells or a Polycab or a KEI for the long haul in the cables and wires, since they are the present leaders and they hold a lot of market share? A disruption coming in from an absolute deep-pocketed large player in cement, how would that change the dynamics?
So actually, this disruption will is at least 2 years away. So first, I mean, their product can roll out in the calendar year 27. So one point is that. The other point is all companies will continue to do business as usual. So the market is expanding. I don't think there would be a dent in the market share. I mean, the incremental market share, everybody is out there to grab it. So it will be a normal course of a business. So 15 to 17% kind of a CAGR on their profitability and volume business growth is likely to be there for all the players, including the new player like Ultratech whenever it rolls out its products. So there won't be any disruption from that point of view. And Ultratech management has clarified that they won't be going for any price disruption or something like that. What is happening and what's likely to happen is like Polycab, KEI, Havells, they all were getting a valuation multiple which was far ahead of their earnings growth trajectory. So if you are growing at say 20, 25 times and you are getting a valuation multiple of 60, 65, 70 times. So that was what was, it's getting resetted or, corrected to the real levels, and but that is what Ultratech decision to foray into the cable wire business has done to the this entire space. There, I think there would be trading rallies in between, but there will be a time consolidation before earnings catch up with the valuation multiples, and there after it will take it forward from there. So for next 2-3 years, I don't see a meaningful upside in any of these present players like KE, Havels, or Polycab. At best, they can get a valuation P multiple of say 35 to 40 times 1 year forward. So that resetting is still to happen, and the time consolidation is the only way to through this resetting will happen.
Okay, got that. Dharmesh ji, before we let you go, what is the advice that you're offering clients at this point in time, the way to deal with this current setup in the market?
Yes, okay. I mean, those who have already invested in city and quality stocks, few of our recommendations are already down 30-40%. So that's there. And couple of them has worked well as well. For example, Narayana Hirdale, it's up 20% in the last 3-4 months where the market has acted. So what we are advising is stay put. No need to panic. Fundamental story remains intact. And we have seen many cycles in last 15-20 years. So this is one part of that cycle. As far as incremental money is concerned, one should be deploying it rather than keeping it in safe bank deposits. So this is the time, and the real wealth is made when you are buying such falls. In the short term, very near term, it may look painful to you because your stock price may still go down from where you bought. But eventually, if you, I mean, sitting on this year's Diwali, we would all be laughing out and toasting to the investments which we have done today.
Okay, fair point. Well, thank you so much, Dharmesh ji, for being with us on the morning show. Always appreciate your presence and the calm, views that you always share in the markets, which are absolutely jittery at this point in time, does help a lot of our viewers to really take, a balanced decision at this point in time. Thank you so much.
Thank
Appreciate
you
your
so
time,
much.
sir.
Thank you.
And we'll continue our discussion with Osho now. Osho, anything else that you've spotted in the interim that you'd like to highlight, either on the long or the short side, any stocks?
Yes, the defensive counters have started gaining some strong traction. So HAL, Bharat Dynamics, these two counters have started gaining some positive traction. Although there is no positive technical outlook that one can expect that from here onwards we have seen some kind of positive crossover or something. But yesterday there has been a hint of positive movement with the kind of engulfing pattern, or not engulfing but inside bar pattern has been seen in both these counters. So I'm expecting that in the coming period, there is a possibility for defensive stocks to have a kind of a performance in the market. For HAL, today we are witnessing approximately 2% already higher, but I'm expecting that in the short term period, 3400, 3450 can be retested in this counter where it might see some kind of resistance if the pressure continues in the market. If not, then we can see a strong reversal coming in this counter also. So HAL one can definitely try to accumulate for 200, 250 odd points from current market price, while on the lower end the support is placed around the zone of 3100. So one should definitely put a strict stop loss of 3100 and should accumulate it for a higher target of 3450 to 3480 kind of a zone.
Okay. Let's actually look at some of the other stocks. I wanted to now ask you on, okay, this is interesting. Second day in a row, and we are actually seeing BL and HAL both showing us some ticks on the higher side, just like how, Osho also pointed out. And, railway stocks also, IRFC, that's on the upside as well. That's also buzzing. You have IRIDA, that's also showing us some strength in the FNO side too. Within the small caps and the mid caps particularly, Osho, how are you looking at the stock spotting scenario there? I mean, today in the small caps we have some interesting names. You have SW Solar, you have Electra Green Tech, you have Garden Reach, you have BEML. You also have Ircon and Jupiter again from the railway space, that's also buzzing in trade. So some of the erstwhile favorites are actually coming back in action. What looks positive within the small caps?
See, overall for small caps, there is a initial sign of kind of a reversal because they have been already into very strong oversold territory. So I'm expecting that one should not be very much aggressive with the small cap, because obviously because of the higher delta they have a possibility of giving a very strong either reversal or a continuation on the sell off side. So until we see a very strong reversal in these counters, one should either focus on day trading in majority of the counters. As you have mentioned, GRSC is looking positive for the day, but I'm not expecting that whether it will continue its trend for a positional basis or not. So it will continue only once it surpasses the zone of 1360-65. So till that time, one can definitely start buying the counter but keeping a strict stop loss of 1200, that will be advisable. So until there is a strong reversal that can be seen in majority of the small cap companies, one should not be very much aggressive accumulating in a very huge amount, huge quantity at current levels, because there is a possibility of either a very strong reversal, then obviously the returns will be very high. If not, then obviously one will stay stuck in the position. So I will advise for intraday trading or for positional 1 to 2 trading session, one can definitely look for some of the small cap counters, but for positional view, one should definitely view on the heavyweight stocks.
Okay, got that. Again, let's look at some of the other stocks that are looking interesting at this point in time. Any pecking order in the railway space for you? Where would you be more convinced about putting in fresh money? You know, today IRFC is up. Even yesterday it was up. IRCTC got Navratna status. You have Jupiter, you have Tejas Networks. Many of them are actually up and about in trade. Is the trend reversing for good? And any key stock that you prefer over the others?
See, all the counters from the railway stock, railway space has seen some kind of positive movement in today's trading session, but overall the trend remains very weak because there has been continuous sell-off without any kind of a sustenance at higher level. So I will wait for the railway counters to have a kind of a sustenance or consolidation even at current levels, because the short-term moving average are also becoming resistance for these counters. So until it breaches the zone of 20-day exponential moving average, one should stay sidelines, or should, or again can have the same approach of day trading in these counters, accumulating the counter but with a strict stop loss of day's low or the previous day swing lows. That will be an apt approach for day traders in overall railway space for the time being.
Okay, fair point. Okay, another space that I wanted to discuss with you, Osho, is the Adani Group stocks. We are finally seeing some ticks even here over the last couple of days. Is this a space that interests you? Adani stocks, should one be looking at them? Many of them are actually down quite a bit from their all-time highs. Do you think finally things are moving in the positive side for this?
Some of the counters, again, yes, they are witnessing some kind of a strong momentum, and or a strong reversal kind of a scenario is being seen in the counter, but again they are hovering below the 20-day exponential moving average. So until the counter still moves or surpasses the zone of 20-day exponential moving average, I will have the same advice to look for day trading or positional 1 to 2 trading sessions with a strict stop loss in these counters, because Adani Green yesterday was looking very positive. It has seen a kind of a very strong bullish candle formation also, but again in today's trading session the counter is down approximately 3%. So there is a kind of a scenario where one should look for opportunities only for a day or for a positional 1 to 2 trading session, but until it day surpasses the zone of 20-day exponential moving average, one should again avoid the counter from a positional or a short-term bet.
Okay, got that. Let's actually look at some of the other counters then. Where exactly can we spot some more opportunities? Within the broadest index, there are some interesting names today. You have Coffee Day Enterprises for the second day in a row. It's up 15%. Yesterday it was 20% circuit. You also have stocks like interesting one, transformers and rectifiers, that's up by 6.7%. Again, I think it's the entire renewable energy power space that's coming back. TD Power Systems is up 6.5%. Inox Green is up. Surana Solar is up in trade. You also have some more stocks like Praj Industries is up 5% today. Indian Hume Pipes, that's also up and about. A recently listed stock, even Akums Drugs, is buzzing in trade. Precision Camshafts from the auto ancillary pack is up. These are all the stocks that are actually looking interesting in the Nifty 500 basket. Anything from this broadest index, Osho, that catches your attention?
See, overall, all the names that you have mentioned have seen some kind of a strong positive momentum. For example, Praj Industry is 5% up, and from a very strong oversold territory, this is an initial sign of reversal in this counter. But again, on the higher end, it is having a very strong resistance around 520. So all the stocks are below the 20-day exponential moving average, or even below the 9-day exponential moving average. So until they surpasses the same on a decisive manner, again, the same approach should be applied on these counters, that one can look for day trading or positional 1 to 2 trading sessions. And after that, once there will be a conviction or once there will be a stability at a higher levels, then one can definitely start accumulating for a positional bets or short-term bets for a higher target. But for the time being, yes, there is a kind of a momentum, but these momentum basically no one catches, because in first 15-20 minutes, if there will be high momentum of 3%, 5% kind of a move, then basically only those who have a position, they can get the benefit out of it. Otherwise, it's a very short span of time where one can stay stuck also. So I will advise to keep a very strict stop loss in these counters and can start buying for positional 1 to 2 trading session.
Okay, got that. Let's actually look at some of the other stocks. I was asking Dharmeshji to talk about cement space also. I wanted to get your sense as well, because India Cements is also on a strong move today. You have about a 6% up move on this one, and of course Ultratech Cement is leading the move. Anything interesting developments that you may want to track as far as the cement pack is concerned?
Yes, the cement stocks are looking positive to me. They, from a longer term perspective also and from a shorter term perspective also. Indian cement again have seen a very decent traction in last 3 days. Today exceptionally 6% higher. So I'm expecting that on the higher end it is having a possibility of kind of a reversal in the trend. On the higher end, 280, 285 is the zone, which is a very strong resistance for the counter. The time it breaches the zone of 280, then we can see a very decent positioning in this counter for a higher targets of nearly 320 on a short term perspective. So one should definitely keep a watch list on the cement space, because I'm expecting that in the shorter term duration or even from a positional point of view, there can be momentum coming back in these counters. So one should definitely keep Indian Cements, Grasim, Ultratech Cement, even Ramco Cements for that matter.
Okay, got that. Let's look at some of the other interesting news. Okay, PSU banks have rallied further. You can actually see a 1.5% uptick on the PSU banking names. Let's actually pull up a few names to see how things are shaping up. You have Punjab and Sindh Bank, that's up. You have SBI, UCO Bank, Union Bank of India, Indian Overseas, Bank of Maharashtra. There's upwards of 1 to also over about 3%. These are the kind of momentum that you are actually seeing across the board in the PSU space, in the banking area particularly. Anything specific that you like within the PSU banks right now, Osho?
See, firstly, the heavyweight SBI only itself is looking very positive to me. Yesterday, a day before yesterday, there has been two consecutive sessions where it has struggled around the zone of 700, but today onwards, there has been a strong reversal in this counter. Even the RSI is indicating a positive crossover just above the oversold territory. So I'm expecting that this could continue on the higher end. Immediately, 722 is a first resistance for the counter, followed by 740. And again, being a heavyweight, I'm not expecting very aggressive targets in a very short term span, but overall the technical structure looks positive to me, and I'm expecting that in the coming period there is a possibility of a strong reversal in this counter. So one should definitely keep this counter in their watch list and even can start accumulating at current levels from a positional or short term point of view.
Okay, fair point. Again, some of the signs of things improving in the markets. You have about a 0.25% dip now on the Nifty, 22,063, but the Nifty banks has reversed its losses. You can see almost a 0.4% uptick on the Nifty bank, with PSU banks definitely leading the show. Now you also have private banks, some of them that are contributing to some gains. The good part is that the small caps are about 0.3% higher in trade. Along with this, you also see real estate stocks. Some of them are showing us some uptick on the higher side. Real estate in the last 3-4 weeks odd has actually given up some of the gains of the recent past as well. Is this space going through a long-term consolidation? Because this has been an erstwhile favorite space, 3 to 4 years consecutively, real estate has really jumped up quite a bit. Both in the large and the mid caps, people have made money. But off late, of course, some of the gains in the consolidation have been given up. How are you approaching the real estate pack? Is it going to be absolutely stock specific now, Osho, here?
Yes, looking at several counters from the reality space like DLF, Godrej Properties, Lodha, all these counters seems to be forming a kind of a bottom for themselves, although it is not convinced that they are forming a bottom as of now. But looking at the technical parameters, they have been into a kind of a consolidation zone in last three trading session, and I'm expecting that in the coming period, overall the historical support also is approximately around the same level. So I'm expecting that in the current period, there is a possibility of some buying traction in some of the counters, like Godrej Properties is looking positive to me. So one can look for this counter in the short term time span. The time it reaches the zone of 2100 odd levels, there is a possibility of movement towards the zone of 24,450 kind of a zone. So Godrej Properties is looking very positive. It has been consolidating for over 10 days in the same zone. So I'm expecting that there is a stock specific approach that one can view in the reality space.
Yeah. Okay, so that's as far as the real estate pack is concerned. Coming to the F&O space, Osho, how are you looking at the moves there? Anything that you'd like to suggest from the F&O pack where one can keep an attention?
See, there are again stock specific action is there in many of the counters. So as I mentioned that already, some counters are looking positive to me, like from pharma, healthcare, majority of the counters are looking positive to me. So one should definitely keep an approach accordingly. The counters or the sectors which are having a kind of a traction for the day, one should stay intact with those sectors, those stocks, and can look for buying opportunity and even book their profits as well. One should not wait for a longer duration from a trading point of view, because we are not witnessing any sustainable buying in any of the sectors. So for example, pharma and healthcare has been into traction in last two trading sessions. So one should accordingly book their profits also, or keep trailing their profits also. So that should be an approach that one can look for. For current levels, I am expecting that Lupin is looking very positive to me. Yeah. So one can look for this counter for a short term perspective.
In fact, on Lupin, there is an Aquarius report today which has upgraded the stock to long with a target price of 2379. They are building in a 10% revenue and EBITDA CAGR over the next 2 to 3 years over FY25 to FY27, which they believe can be strong and positive surprise. They also are seeing strong visibility till FY27 estimated earnings, when the peer earnings are going to deteriorate, and they expect Lupin's multiples to re-rate as well. So that's something that even brokerage houses are positive on right now. Okay, any last stock ideas or suggestion that you'd like to give before we let you go, Osho, on the show on the trading strategies for investors particularly?
See, firstly, for a benchmark index, I'm having a very strong view that from here onwards there is a possibility of very strong reversal in this counter. For example, I'm expecting 22,200, 22,250 kind of a zone for Nifty. Accordingly, Bank Nifty also, we have seen a very strong reversal from the morning trade that we have seen. There has been a strong dip, and from there onwards, it has moved nearly 180 to 200 odd points. So I'm expecting that overall there is a possibility of market to regain some strength, and accordingly one should look for a stock specific approach. For today, I'm expecting that defense counter can see some kind of strong traction. So counters like BDL, HAL, both these counters are looking very positive to me, and they have a strong potential movement of nearly 200, 230 odd points for HAL. So one can definitely look to accumulate that counter also. And for BDL, again, this counter is also looking very positive to me from a short term span, and I'm expecting nearly 1080 to 1140 kind of a target for the day trading. So one can look for these stocks for short term or day trading for the day.
Absolutely. Okay. Thank you so much, then, Osho, for being with us in the morning edition to share with us all your thoughts and the key stocks and strategies that you've suggested to us. 22,050 right now, viewers, and the Nifty are a 0.3% lower in trade. On the Nifty Bank, when you see there's a 0.3% of an uptick. Signs of reversal on the banks, on small caps. Now, broader markets also participating, but let's hope that this continues for the better. There's this sell-off that on IT that has also reduced. It was 2% down earlier. Now we are seeing a 1.2% downtick. Among the top stocks on the Nifty in the first 45 minutes or half an hour of trade, you can actually see BEL, State Bank of India, IndusInd Bank, Power Grid and Adani Enterprises as the top movers on the Nifty. On the lower end, you do see stocks like Nestle dragging 2.8%, Bajaj Auto falling 2.5%, and IT stocks like HCL Tech and Tech Mahindra along with Eicher Motors and even Bharti Airtel. So autos and IT and also some FMCG names that are on the declining side today. PSU stocks still better off. You can actually see railway stocks coming back into flavor after a long haul. Some defense stocks also coming back after a long haul as well. Many experts believe, like, we've spoken to both of them today. They did see that, of course, stock specific action has to be kept in mind, but these spaces remain to be oversold and there could be some selective opportunities here for you to see. We'll continue to track the markets for you throughout the course of the day. In case you have questions about what should you be doing with your existing stock portfolio or with your fresh funds, well, you can ask all your questions on our show Daily Calls that comes in at 12 noon every weekday, and that's where we will be helping you with top market experts guiding you through your stock specific queries. Stay tuned. There's a lot more to track throughout the course of the day.
In the early hours on Friday at about 6 a.m., a glacier from Mana burst